guys just do your thing, you know?
Appreciate it. Are you on Instagram?
Me, yeah, I am on Instagram.
Awesome.
You
Yeah.
need me to test anything, or?
Yeah, could
No.
you let us know if like you could hear me on the computer? Like
Okay,
if you mute your computer audio, can you hear me from Stefano's Instagram?
let me check. Yeah, I do hear you.
Okay, perfect. We'll do it that way. Cause then there's gonna be an echo if I hop in on the Instagram and then also from the computer.
What's up, guys? I'm just gonna.
And then Stefano's, if you got any questions on Instagram, then of course let me know, and then I'll let you know if there's anything off of YouTube.
Absolutely. Are you gonna be on Instagram or no?
No, cause there's gonna be an echo then, right?
It doesn't sound so clear, so maybe like have the phone close to like the computer audio, so Sharma, you could hear it clearly.
Okay.
Yeah, we gotta figure this out. Let's see. Full fundamental and technical breakdown. Ping comment. Alright, we'll see what's up. What's up, guys?
You can hold it up, classic Stefano's, if you don't mind.
Yeah,
just like that. Yeah, there you go. All right.
Okay.
I'll give it like
What's
4
up,
more
guys?
minutes. But yeah.
Alright, want to turn you up? Trying to say something?
Hello, hello.
Can you guys hear me clearly on Instagram? Just give me a little feedback. Just testing this out. We got about 3 minutes before we start.
Yep. Happy to start doing this on Sundays, and then also everybody on Instagram and YouTube, of course.
100%. Yeah. This was just fun when we used to do this. I don't know why we stopped. Why did we? I guess we just wanted to give ourselves the weekend.
It was that too, but just the Sundays or the Instagram one?
The Sundays.
Oh yeah, the Sundays. Yeah, I think it was because we weren't able to. There were a couple of Sundays where we weren't able to do the breakdown. And then we started moving it to Monday when all the markets would open up instead of like pre-market. So there would be new levels and then price would be moving and things like that.
Yeah, 100%. What's up, Vicky? Guess that's how you say your name, Vicky Forbes. So give it a few minutes.
Yeah.
We'll start breaking everything down fundamentally and technically as we used to do. I don't know if you guys remember this on here, but we used to do this every single Sunday. Just, about an hour long. Post your questions in here if you guys have any questions on the markets and what you guys are looking for the week and anything fundamentally, technically, and we'll get to them after the breakdown. So we're going to start with fundamentals. Sharma's going to lead us, lead the way, and then we're going to get into technicals as well.
Absolutely. So obviously this is our first time doing this, on YouTube and on Instagram. But we'll kind of figure out a way for next time a little bit more efficient. But, the way that we pretty much want this to work is, we're going to be live on both platforms. So you guys will be able to ask us questions for these weekly Outlook sessions. So things that are pretty much going to help you out throughout the week. So just feel free to ask us any questions that you might have or anything like that. But hopefully this is a lot more helpful than the other weekly outlooks that we have been doing, which is just recorded, and this way you guys can get any questions, concerns, and everything like that out of the way before the market opens up.
Exactly.
Let's give everybody about another minute or so.
Yep. Started off at 12.
Everyone on YouTube can hear me?
Andreas, you can hear Sharma clearly on Instagram?
Yeah, I can.
Alright, awesome.
Perfect.
Ricardo, what's up, man? Duke of Will.
Same with YouTube, by the way, Sharma. I can hear you good.
Alright, perfecto. Alright, it's top of the hour. Let's go ahead and get started then. So, like Stefano said, we're going to go ahead and get started with the fundamental analysis and then move on to the economic calendar and then move on to the technical analysis with Stefano's. If you guys, hopefully you guys can hear Stefano's. He's on the Zoom here as well. If you guys have any questions, again, just put that into the chat and we'll get to it right after we're done with the analysis here. So there's 3 main articles that I want to go over before we move on to the economic calendar. And the very first one here is with Pell, with expectations to reset, or the chance to reset market expectations at the Jackson Hole. So the Jackson Hole is
By
pretty
2050,
much
electric vehicles are estimated to account for 56.
This video's always playing.
Yeah. So the Jackson Hole Conference is pretty much this place that all the central bankers, all the market participants, any finance ministers, so all the finance people come together pretty much at this conference, and they're discussing the current state of the economy. They're discussing what are potential moves. They don't really talk to the press. You will hear people who are close to these conferences, talking about assistants or anyone like that, who will come out, and sometimes the officials may give you a little bit of a hint of what they're talking about in the conference, but there's not a press release, right? There's not a press conference Q&A kind of a thing that usually tends to happen when we get the interest rates, something like that. So this is important because this is where pretty much all the leaders are coming together. People who are making decisions about finance coming together, and they're discussing the current state of the economy, what's happening from the financial aspect, and how to move forward, and any other important discussions around finance and the economy. So we have that coming up. And so the expectation here is, can Powell pretty much reset the expectations in financial markets when the central bankers gather this week at their conference, at their Jackson Hole retreat? So he's going to be talking on the economic outlook at 10 a.m. Washington time, which is just Eastern time, and he's expected to restate the Fed's resolve to keep raising interest rates to get inflation under control. So the sentiment across almost all central banks is that they're going to continue increasing interest rates, and that they're going to continue moving into contractionary monetary policies, which is pretty much contracting the money supply, different ways to contract the money supply in the economy and start to make money, less cheap. So what I mean by that is, when money is cheap, pretty much your dollar is worth a lot less, and it buys less amount of products or services or goods, whatever, than it did when the money supply was contracted in the economy, when money was a little bit more expensive. And that's pretty much, taking into account inflation and everything like that. So that's one of the main tools that any central bank has in order to combat high inflation, which is interest rates, continue increasing interest rates. Now, when you're looking at the current economy, so I'm talking about August 2022, what has happened so far is that we've had very aggressive interest rate hikes. And after that, we started getting some fears of potential recessions, right? You're starting to sit in this stagflation sort of an economy where inflation is still there. We have not hit 0% inflation, right? It's not that inflation has completely gone away. It's just that now it's slowing down, right? Now, instead of those aggressive hikes that we used to see in those CPI numbers, we're starting to see some of that slow down. So there is still inflation, it's just at a very slow pace, right? But the economy, it's not growing anymore. So that's pretty much what stagflation is in layman terms. And so when you continue to increase these interest rates, as we did, aggressively, you hit a point where the consumers start getting conservative, right? Where there's inflation's increasing, there's layoffs happening when you're looking at the macro level. Where there's a lot of companies, when we're talking about big tech companies and just any other industries doing layoffs now. And so there's this potential fear of, are we moving into a recession, or have we already started a recession, and how bad can this recession get? And so that's what the discussion is here, and that they're going to continue increasing interest rates maybe towards the end of the year, but they're going to slow down the pace. So instead of seeing those 75 basis point hikes that we have been seeing the last couple of times, maybe we're going to see half basis point hikes, right? What I mean by that is a 0.5% hike, or slow it down even further to quarter basis point hikes, which is 0.25. So that's what the sentiment is about majority of the central bankers. And so the Jackson Hole conference here is going to be very important. It's going to be setting up expectations going towards the end of the year. So that's for Powell, and they also have the same thing from ECB here. Bank of England Governor Bailey also will be speaking. So this is going to be a very important conference. If you're trading this week, this is going to be one of the main fundamentals to watch out for. And then I'll go a little bit out of order here.
Electric vehicles are...
the next one that I want to go here is going to be Europe slips towards recession as ECB continues to increase interest rates. And so what's happening in the European area, instead of just looking at it from like, black and white perspective, that there's inflation and then, the cost of living and everything like that in the UK and the entire European Union is starting to increase. There's also the fact that they've been hit hard with the Russia-Ukraine war. And what I mean by that is Russia used to supply 40% of entire Europe's energy supplies, right? And obviously that's being cut off. Europe is trying to move off of that. And so with that fear, or with that fundamental comes a fear of how are we going to replace that 40%? Right? That's a huge percentage for any country, especially or any area or any region, especially of that size. And so with that fear also comes the question of, in the winter, obviously things start to get cold. You need energy, you need gas, you need all of that to, for your heaters, for your basic necessities day to day. And so we had that fear that kind of contributed to whatever's happening in Europe from an economic perspective, which is that obviously the entire European Union is not doing very well. And then there was also the sense of, well, the ECB didn't really increase interest rates, aggressively or on time. And that's also kind of leading to this inflation, where you didn't use your main tool, your monetary policies or your interest rate hikes, to combat the high inflation. And so as now they're finally starting to increase interest rates, they finally made that decision, but they're not doing it as aggressively as, we saw Bank of England do or the Federal Reserve do. They're doing it at a very, slow pace. And so now comes a discussion of, well, how aggressive can we see the ECB get, or are they even going to get aggressive at all? And so with this slowdown of a reaction when it comes to inflation, given everything else that is going on with the war and whatnot, there has been high inflation in the entire European area, but also this sense of, well, if you're not going to react to it quickly enough and aggressively enough, we're in for a very long recession. And that's what the Bank of England governor and their officials already came out and said, that in the UK, that the recession is going to be a very long one, right? And a lot of other central bank officials, they're not saying the same exact thing, but that's true when you're looking at the economic data. A lot of them share pretty much the same numbers, right? Or pretty much the same trends. And so that's pretty much what the fear is right now when you're looking at the entire European area, when you're looking at the euro, if you're trying to trade the euro. And so the biggest economy in the entire EU is Germany. So whatever happens in Germany, whatever sentiment's being pushed out for Germany, you can pretty much expect that that's going to have a huge trickling effect through all the other areas around it. And so that pretty much takes us into the next article, the last article here before we move on to the economic calendar, which is that Germany may resort to nuclear plants to plug in the Russian gas gaps that they have. And so obviously a lot of, if you're following any international organizations that a lot of these countries are a part of, you will see that a lot of the countries have pretty much pledged that they're going to move off of, fossil fuels and things like that and start moving into some more clean energy. But obviously, and this was one of the things that the entire Europe had agreed on too, which was that by December, they were going to close out, a lot of these nuclear plants and whatnot, or the reactors. But there's an option of extending the lives of the nation's 3 last reactors beyond December. And that's only because that there is huge worries that Europe's biggest economy, which is Germany, won't be able to replace the natural gas supplies from Russia. So that's pretty much what's going on here. There's more market fear being settled in. When you guys are reading these articles, you really want to understand what's the market sentiment rather than exactly what they are saying, right? Because as investors, you want to think about, what's coming up next. And so that's a lot of the people, whether it's just us, the retail traders, or the bigger participants, or any investor outside of even financial markets. If you're an investor, you're always trying to capitalize based off of the market sentiment. So how do you feel as an investor, right? And that's pretty much how you're going to be making your decisions. If you think there's a lot of market fear settling in for a certain currency, for a certain asset, obviously you're going to be moving your money out of that and going into somewhere where there's a lot more optimism, where there's a lot more opportunity for you to make more money on top of your money, right? And that's what's pretty much happening right now when you're reading these articles. There's a lot of market fear that's settling in. Any questions about the article so far?
No.
Okay, perfect. Let's go ahead and move on to the economic calendar, and then I'll pass it over to you, Stefanos.
Sounds good.
So today, we don't have anything coming out, so it's going to be quite an easy start. A lot of it is going to be technical moves, so really pay attention to the technical analysis aspect if you're trading today. And then going into tomorrow, very easy. Once again, there's really nothing coming out in New York session or even London session. Things start to pick up a little bit in Asian session with the flash manufacturing and services PMI coming out. And then you also have Bank of Japan's core CPI coming out in Asian session. And then Tuesday is when it's going to be one of the important days too, where you have a ton of PMI data coming out. Again, if you're really not sure how to trade PMI, I've done a simulation session last week that you can go back and kind of watch to understand how to translate the economic data onto the technical side. So this is going to be very important. Tuesday is going to be very important. London session, where you have the German flash manufacturing and services PMI coming out, and then after that, pretty much the entire Euro area. You got the GBP manufacturing and services PMI coming out, the US services and manufacturing PMI coming out. This is very important because once you drop below 50, and that's what the expectation is for majority of this, you start moving into contractionary industries. So that means that things are starting to slow down. From the services side, obviously you're going to be putting in less orders to the manufacturers, to the wholesalers, and then obviously the manufacturers and the wholesalers and the production side is going to slow down their activities as well because they're not getting a lot of orders. So obviously, just using like basic economics, I guess, where if you're not getting a lot of orders in, you will probably not be producing a lot more either. You're only going to be producing for the amount that you're asked for. And then for the US, it seems like we're starting to move towards that 50 mark. As soon as you drop below 50, again, it's contractionary. Anything above that is expansion of the economy. So it seems like for the US, we're moving towards that 50 mark a little bit. And then you have, as you continue down, you got some low impact news. Wednesday's going to be quite easy as well. It's just understanding core durable goods, what's happening there. All of these low impact and medium impact news, if you can understand what's happening on a micro level and be able to put that into the bigger picture and what's happening on the economy. So for example, if durable good orders drops down as they're expecting it, then that means that the consumers, when you open up this folder, it'll tell you everything, but it means that the consumers are putting in less orders for new purchase orders placed with manufacturers for durable goods. And this includes everything like automobiles or like computers, appliances, airplanes, anything that has a life expectancy of more than 3 years, right? So those tend to be some of the bigger purchases for a lot of the consumers. And then Thursday is when things start to pick up a little bit more, but it's going to be a lot more volatile on Thursday and Friday because that's when you have the Jackson Hole, right? And again, this is important because this is where all the finance people come together and they're pretty much talking about what's happening in the economy and how to move forward with it collectively. And then you also have the prelim GDP coming out for the US. So there's 3 different types of GDP. You got the advanced, preliminary, and final. Advanced tends to have the most effect because it's the very first GDP data that comes out. And then if you get the prelim GDP coming out at negative again, that just gives you further confirmations of that recession that we've talked about, that we are officially in a recession. That's pretty much it for this week. So again, a quick recap. The important days are going to be Tuesday and then Thursday and Friday. Thursday and Friday expect a lot more volatility. Over to you, Stefanos.
All right, great job. So I'm just going to put this right over here. I was doing a little testing before as far as how you guys would be able to see this on Instagram, and it didn't look bad at all. So if you guys can see this chart over here, just a little bit, get you guys closer.
There you go.
And what we're looking at here is GJ. So normally what I like to do is I like to keep some of the historical levels over here. Move that over. I like to keep the historical levels marked off, so like some of the trend lines, some of these levels like 156, 168, 149 on GJ. I like them pretty much on there, and then from there I like to break everything down and erase everything basically from the daily all the way down. So I do a fresh analysis from the daily all the way down to like the 30 or the 15 minute every single day, but I like to leave those historical levels. With you guys being on Instagram and us getting back to this, I'm going to be erasing these and doing everything from the historical levels. So looking over here, since back in 2007 and 2008, we had that bearish movement where we've been creating these lower lows and lower highs, a descending trend line over here. So we finally ended up breaking that with a lot of the favorable central bank basically pumping money into the market and having low interest rates, where since COVID, we've just been pumping up over here, right? So we ended up breaking that bearish trend line over here, and since COVID, we've been bullish. This support down here is from the 2008 market crash. This was our recovery up here, which is what we're at right now. We are basically doing the same exact thing over here since COVID, right? So can we continue this bullish trend over here and continue back up to 190? Right now, Great Britain's economy is really in stagflation right now. They are not doing too well as far as inflation goes. Inflation is way too high. The growth is low. They're not doing too well. So you've been seeing some kind of a contraction or a pullback here on GJ coming back to previous levels. Just make sure you guys can see this. Can you guys all see this okay on IG? Just let me know. I'm not going to be looking at it until the end, but all right. So,
there's one more thing that I want to add from a fundamental perspective when it comes to the pound that I forgot to mention, was that they still have elections going on, right? So that's going to be very important to kind of understand the direction of the country too. Any administration that comes in obviously has its own agendas, so it's going to be very important to see, pretty much what happens in that sense. And depending on whichever administration comes in, are we going to continue this aggressive approach towards the economy, or are you going to ease up a little bit, which is something similar to what's happening in the U.S., where we are easing up a lot, and from fiscal policy perspectives, new bills being introduced and everything like that, where you keep putting more money into the economy.
Absolutely, yeah. I mean, we were going over it yesterday with the fundamentals in the boot camp of how important interest rates are when it comes to currencies and the strength of a currency. That's probably the number one, if not the number one mover of any kind of currency. Elections are really up there, right? Elections, policies of any kind of country can really shape a country for the future and even the present right now. And if you have very drastic policies, they're going to change the present pretty quickly. And I'm sure you guys are seeing that around the world right now with what's going on. But moving over to the technicals again, that was a great point. But moving over to the technicals, I'm marking off over here. This was that little recovery from Brexit. We came all the way back down to 128, held that support. We had the pullback and came right back up to 156 before forming these lower highs over here. And then finally, well, not finally, but COVID ended up happening, and we finally ended up reaching 156 over here. So that's obviously a very strong level over here. So I'll just mark that off exactly at 156. Since tapping into 156, let me zoom in so you guys can see it a little bit better. Since tapping into 156, we had a pullback back down to that previous support over here, and that was 149. So I'll just edit that, 149. So since then, since tapping off that support, we had that bouncing going on between and ranging going on between 156 and 149, which is why we marked those levels off, right? Then Ukraine was invaded by Russia, where we got this pullback back into this area, and then we ended up taking off with increasing of interest rates from the Bank of England, right? So we came all the way up to, I would say, 168,600, which was that next high that we created up here. But 168, I would say 300 was the original high that we created, the yearly high right up here, where we ended up rejecting but closing a strong bullish candle close. Next candle ended up closing a very weak bearish candle where we came back down to 156, rejected, closed a very weak candle. Next candle created a bottom wick, passed the high of that candle, and retested the high. Ever since then, though, we've been making these lower highs. Ever since 168 was retested, we've been making lower highs here on the monthly, and then you can see it on the weekly and daily, and obviously the lower time frames as well. But right now, looking at the anatomy of these candles, we literally just got a strong, last month of July, we ended up getting a very strong bearish candle close with a top and bottom wick, healthy top and bottom wick. Next candle created a top wick, respected the high of the previous, and passed the low of the previous over here. And ever since the beginning of August, we've kind of been bouncing around this area right here. But looking over here at the weekly now you can start to see some of these levels. 166 are those candle body highs that we ended up retesting multiple times over here with these candles, but rejecting multiple times. Right? We rejected that level multiple times, closing bearish candles over here. We come up after creating this low down here. We ended up retesting that 159 area. We came right back down, closed a bullish candle, but a weaker bullish candle. Next one respects its high, flips bearish, closes a strong bearish candle. This one respects the high as well, passed the low of the previous candle, and comes right back into that area around 160, which we can mark off as a strong level as well. 60. Alright, so right now we ended up bouncing off 160 again last week, right? And right now we got to see how we're going to end up opening. Are we going to continue this trend? Are we going to create like a top wick here, flip bearish, and continue back down to fill that wick? Again, like we said, we have a lot of stagflation in Britain right now, so that's obviously not good for the economy. But we're seeing that further retracement here on the Japanese yen, where you see these lower highs being created. Are we coming back down to retest the previous low? If that's the case, we either continue to consolidate or we continue back up on a pair like GJ.
I would also create a zone based off the weekly time frame here. If you go back up to the weekly real quick, Stefanos.
Sure.
Right into... Give me 1 second. Right into where that previous weekly candle closed and right here. And that's because when we look into this area, you see all these wick rejections right here. So if we're able to continue pushing down, like you said, below this zone, then that's all that liquidity especially after making a top wick and then pushing right back down. That's all that liquidity that price can potentially grab from this zone. And then you can see a lot more volume kicking in. And again, that goes with like the PMI data and then also, Jackson Hole and everything like that. That's coming out this week.
Absolutely. Yeah, so we're now rejecting that level again, like Sharma was just saying. So let's see what we look like in the daily here. So the daily, just going to make that a little bit thinner here. Daily, again, we got that support right there, previous resistance. Right here, I'm just going to get rid of this for 1 second and just go back to it. Where we had the low being created, we ended up rejecting 166 once more, and then having that hard push down, coming all the way back down to that 160 level, came all the way down to 159,500, right? But we rejected and held the support right here, right? So we end up holding a support right here. Price keeps rejecting that area right over here, and then coming right back up to 163, 164, right around this area to hold a resistance, right? So now you can see this range pretty much. You can always lower this because you have this support right down here, right? So if you got rid of this, that looks a little bit cleaner where we're kind of like in this range. But what I'm looking at specifically is that resistance getting rejected multiple times. And then previously, the end of last week, we ended up getting, what was this, Thursday, I believe? Thursday, we ended up getting a top wick formed, passed the low of the previous, and closed a strong bearish candle. Next one creates a top wick, flips bearish, and closes, again, a weaker candle. So can we hold some kind of a support where Sharma was just talking about right here? I would say like, 161, 800?
Yeah.
Somewhere around there. 161. So can we end up holding a support somewhere in here? We'll see what we look like in the lower time frames and then continue back up. But right now what I'm seeing are lower highs being formed over here and price possibly continuing down because you see these lower lows being formed, right? On the lower time frames it looks like a higher low over here because of this wick. So maybe we start coming up, but I'll get to that in a sec. But are we going to continue back down from there? Is the next candle going to create like a top wick, flip bearish, and pass the low of these previous candles? Looking at the 4 hour. 4 hour, you can really draw this resistance like that. You got so many different rejections in this area. Finally exiting it again. But again, you have the support. What I like is the fact that we have this support right here. And that resistance right there. that since rejecting this area for the second time, we come down, hold the support, strong bearish candle close, by the way, with a wick to fill. We retrace back up to this level, the previous support and resistance, and then we continue down. And then this candle right here ends up closing below the previous support, right? So the next candle, are we going to respect that level and continue down with a clean move to the left, right? We do have this level right here that we need to wonder about and be aware of. Can we end up coming down into that area with a clean move to the left, retesting it, and possibly continuing back up to maybe form a lower high? We come down into this area, we come back up into here, and then continue back down, or we start breaking this area with a weak Japanese yen, and we continue back up to start the week, right? We do have this support right down here as well. That if we break this 161.400, we can head to 160.100 or 400. All right, looking at the 4 hour now, or the 1 hour, excuse me. We can adjust this trend line somewhere around there. Again, guys, pay more attention to support and resistance. Trend lines are just to kind of help you with the overall trend and what you think price is going to do. I'm going to adjust this previous support, resistance. We rejected one more time before heading back down last week. But right now, it looks like we're kind of sitting in this range, right? We ended up retesting the previous low. Friday, we got some nice moves over here where we broke that support, come up, retest that area, but we ended up holding support right here. So can we trade in here, or would we rather wait for price to break out of that area and continue down? Maybe we could get that today during Asian, moving into London tomorrow. We could get a further break below over here. But let's see what ends up happening. Let's see if we hold some kind of a support, because last time we ended up breaking a previous support and creating a new low. Price consolidated in that area. Then we get a pullback before continuing down to break the next support down here. So can we end up consolidating right here, push back up to create a lower high somewhere in these areas, anywhere in here, and then continue back down just like we did right over here. Right? History repeats itself. So now looking at the 30-minute, again, this whole area right here, we need to break out of, right? It's going to be tricky to take any buys if we break above this area, but right here, I would wait for that break and retest. Can you possibly take something up into this area? Got about 22 pips. It's not really that big enough for like a Sunday or maybe early London session. We'll see if it ends up happening, but you're really trading against the trend here. So you're going to have to really wait for that clear break and retest, at least on the 30-minute. But over here, if we end up breaking below, holding that resistance right here, holding this resistance and then continuing down, can we end up breaking 161.650 to continue down and mirror the move to the left right back down into this area over here of 161.400? All right, so again, this is your no trade range. What I like to do is draw this for you. And then this up here will be like your medium area that you could be taking a trade in. Right? It's not like that green area that, let's see, rectangle, that you would get down here with this clean move to the left. Right here. So this would be the best case scenario if you get this further pullback or push before continuing back up and getting some kind of a pullback. But I could definitely see price coming back into these areas over here and then coming back down, something like this. Kind of consolidate, maybe we break up even more, get some kind of a fake out, and then continue back down. And then this is the area you want to trade, but you definitely catch something from up here, just like you were able to from up here as well. All right, so just keep an eye on those levels. Be smart. Don't get caught in anything like this. And like I said, just stick to your plan, stick to your setups, and only take those. If you guys continue to study your journal, you guys are going to start to see the best setups that you could possibly be taking, and it's going to cause you to stay out of some of the medium to low high probability setups that you probably were taking in the past. But moving on to gold now. Gold, same thing. I'm just gonna kind of erase all the stuff that we already had as far as historical levels, and we can remark them. Starting with up here, the all-time highs of 2075 that were tapped during COVID. Over here, we started to learn more about COVID. Right, a few things happened: fear of inflation, the Israel-Gaza conflict. You had great NFP here, great NFP here that bounced off of a level called 1680 that we all pay attention to. If you guys trade gold, price keeps bouncing off that area. We recently got a previous bounce, right? And then again, Russia-Ukraine pushed us right back up to those all-time highs. Since tapping into that area, that profit-taking area, supply zone, price has been very bearish, creating lower lows and lower highs because of the federal bank, the central bank of the U.S. increasing interest rates, and basically the rest of the world following. But right now, you're getting beautiful bearish candles creating higher lows, or lower highs and lower lows to retest the previous area and break the low to create a new low. So right now, the current monthly candle is creating that top wick already, flipping bearish, broke the low of the close of this candle, broke the low, and are we continuing back down to 1680 to retest that area? You'll be able to see it a little bit better on the lower time frames, but just going to mark off a few levels, like 1750 is a level I pay attention to. You'll see it on the lower time frames. 1830, which is a previous resistance of this consolidation, which we're now kind of sitting in, but it looks like we're kind of exiting right now. We're sitting right around that 1750 area to possibly continue down, but you got some clean moves to the left over here in the higher time frames that you could definitely come down and fill that wick if the central bank remains as hawkish as they've been. So this was basically like a short-term pullback that we called last week, where price came back into a previous support, held a resistance, and then just tanked from there. And as you can see, since all-time highs up here, we've just been creating these lower highs. We ended up kind of breaking, but we'll just keep it there because you got these wicks. You'll be able to see this again on the lower time frames a little bit better. But very key area right here. Previous support formed a resistance, and price is just tanking now to retest the low. How many of you guys would take this as a scalper on the 30-minute to retest these lows over here? Especially if this candle created a top wick, pass below the previous candle, and just continue down. Like that's a great move right there. Alright, so now we're sitting at 1750. Now you see why we formed that support right there. We're now matching up with it, but we could be pushing right through it. But I wouldn't be surprised if you get some kind of a pullback from that area. Price coming back into here, and then continuing back down. But we'll see what we got down below on the daily. And you can see that trend line a little bit clearer. Key area where you meet up with a previous support. Right, and now perfect resistance. We got the last tap over here with some fundamentals that came out last week. But ever since 1680, you see why we marked that off. We've been bullish, right? Printing higher lows, higher highs. We start stalling out over here, and price just completely corrects that move back down to 1750. So now, last daily candle closed a strong daily candle over here. Don't be surprised if you get some kind of a pullback from this area. This is a little overextended, right? At some point, you need some kind of a pullback, just like you get over here, where price is like really overextended over here, and then you get this pullback to then continue back up. Pullback continues back up. So right over here, same exact thing for sells. We push that hard. Don't be surprised if we come back to 1760, hold some kind of a resistance right here. I'll make it neater. Some kind of a resistance anywhere in here, maybe even up here, and then continue back down from there.
If I could add one thing here, based off the daily, is also that you don't really have, pure confirmations of turning any like scalps or day trades into swing trades until you break below this area right here, which is where price has held on to this resistance. which was the last high that really price made before coming right back down into 1680 and then continuing back up bullish like Stefanos marked off, right? And so that's exactly where the last daily candle also closed, rejecting that and then looking for some pullbacks. You have to understand that this was a massive push up from 1680 when you go up to the weekly time frame. If we could hop right back up real quick. When you come to the weekly time frame, we haven't seen any retracements, right? And if you zoom out and you look to the left here and you take a look at what has been going on, give me one second. When you look at what's been going on at this zone, you see that there's been a massive push here as well, right? And that's after consolidation. Same thing here where with bottom wick rejections and then a massive push up, you need to wait for those retracements prior to continuation back up. Or you come right back into this consolidation, really don't have, enough fundamentals to continue pushing. So that's what we need to watch out for here. If price can continue breaking below, this area and then continue pushing, then you got those clean sell opportunities that you can turn into swing trades coming down to 1680.
Yeah, absolutely. All right. So looking at the daily, just covered that. And as you guys see, we've been making these lower highs, breaking previous supports over here, coming back down, creating a new low, coming back up to retest that area and continue right back down. So don't be surprised again after a strong push like that. You kind of got a little pullback over here in this candle to continue down. But can we get some kind of a pullback now that we're breaking 1750, like Sharma said, back up into some of these areas? Let me see right here. You had a previous resistance and support in this whole area. You could really mark it off like that if you wanted to, but I don't like to have thick zones like that. But where could our destination be after closing a very strong 4-hour candle right over here and another candle closing right over here? Where could our destination be if we continue to fall over here? I would say right around 1740, right around this area, because you got that wick right here, resistance here, and then we ended up holding some kind of a support. So anywhere in this area right there, price could be coming down into. Fairly clean move as well. You do have some kind of a support right here. We'll see what that is. But again, I'm personally expecting some kind of a pullback. Been holding lower lows, lower highs already, but we could very well, break back above some of these areas, and this area is possibly due for a retest so that you can get in at a better price and continue back down.
Yeah.
You see the 1 hour. All right. So back to, it was a little different what we've been doing with breaking things down on Monday. So we have a moving market pretty much on a Monday afternoon. Right now it's Sunday, so you're really looking at the higher time frames as far as what's going to possibly happen. Let's see if 1750 ends up respecting and continuing back down, but just don't get trapped, right? Understand that prices, you're not getting, like this price action right here tells me that we could very well be somehow getting a pullback from that area pretty hard, right? So we'll see what we end up getting with market open, but just what we're trying to tell you is just expect some kind of a pullback. That's probably going to be happening at gold. But yeah. If not, if you keep holding a lower highs and lower lows, you very well be continuing back down to 1740 and possibly even further.
Yeah.
Because everything is pointing to bears right now. You got the Jackson Hole Symposium, so if they remain really hawkish, you're going to see this continue to tank down. Again, looking at that weekly, you're going to continue to see this falling over here, just like we got right over here. Where is that? There you go. Right here and right here, right? You get these short little pullbacks, right? And then price just tanks. Little pullback right here, price just tanks, right? And not to mention, we were in the same kind of, not very different economy back then when we were recovering from 2008, but very similar price action over here. This is when they started to increase rates, right? After the, after easing them back in 2008. So now, could we get something like this, breaking previous supports around 1550 like we had over here? Can we do the same exact thing with 1680 to continue back down?
Do we also want to break down US 30? Do we have anybody who trades US 30?
Yeah, would you like to?
Yeah, we could do it.
Sure. Alright, let's stop share.
Good, cool.
There you go.
Give me 1 second. Alright. So here's US 30. I have these 3 levels marked off from the monthly time frame. But this is pretty much that support for all these candles right here, right? Where the candles were closing. And then I also have this zone marked off, which is from that top wick rejection of the current monthly candle. Right up top here. And then I also have this little level right here marked off, 32,800, and that's because if this candle breaks below this area, then we know that, you know, this candle is going to flip bearish, and we can look for those continued sell opportunities, eventually coming back down into this 30,800 mark here. And then when you look to the left, there's a lot of wick rejection. So that's really all I have marked off based off the weekly time frame. Now when we come onto the week or the monthly time frame, now when you come onto the weekly time frame, you get further confirmations of these levels. So you can adjust this if you want to, like right around this area right here. And then same thing, I'm gonna tighten it up right there. And that's all that consolidation support, right? And then finally we start breaking below this. This is where the first low is being made, this 32,800. You got a nice pullback, grab that liquidity from here. How do you know there's liquidity? A massive top wick rejection and then a huge sell off to come back and create new lows. So we've had that nice, you know, bearish pressure to the downside. We come back up and then again grab liquidity from up top here, and then we close back down bearish. So what I want to see is for continued sell opportunities, I want price to continue breaking the previous weekly low, which is right down here. If I zoom in, and that's going to be that 33,500 mark. So anything in between, you can look for any scalp opportunities. That's perfectly fine. But as soon as price breaks below this 33,500 mark, I think we're good for any sell-off opportunities coming down to 32,800 and then finally making our way back down into these previous lows. If price continues to fluctuate around here, maybe we could end up seeing, you know, a couple of weekly candles closing and a lot of wick rejections. That just tells you that, you know, the price isn't ready to move in one direction or another, and that makes sense when you're looking at the fundamentals. Right? US 30, you're pretty much trading the entire stock market here, where a lot of the companies, they're just doing a lot of layoffs. Obviously, they're not, you got the earning seasons and everything like that. They're obviously not doing the best. They don't have the best outlook, obviously, if you're laying off people, right? When you have optimism for the economy, obviously you're going to be hiring more people because you're expecting more consumers to come in, your sales to ramp up and everything like that. You need more labor, and that's pretty much is not what's happening when you're looking at the microeconomics of what's going on, you know, within the US. And so this key area is very, very important here between this 30,800 and 33,500 mark, because if we can hold on to this area as resistance and continue breaking below this, then we got those potential sell opportunities. You get your confirmation from the daily time frame. So once again, you are still in that bearish trend. We're still in that bearish trend. We haven't broken that bearish trend just yet. When you drop down to the daily time frame, you see that, you know, the last 3 days of last week, we've had a resistance being held, and then on Friday we closed back down bearish with no top wick, which tells you that there was a lot of bearish momentum. We didn't even test going bullish here at all. So what I want to see here is, once again, this new daily candle forming, give me some sort of a top wick, and then continue pushing down from there, and look for those potential scalps, anything that can be taken here, turn into a swing trade as we're looking for more potential sell opportunities coming back down to this 32,800. Get your further confirmations when you come onto the 4-hour time frame. Quite similar to what has been happening on the monthly time frame when we saw a massive bullish push up, right? And then we started to see price consolidate out here before it started to break the lows. That's exactly what we're seeing here on the 4-hour time frame. You saw a massive push up, consolidation. You got a break and retest. So now what I want to see on the following 4-hour candle is either give me some sort of a bullish push back right into this 33,800 mark, or give me some sort of a top wick rejection and then continue pushing down, and that would be the sell opportunity that I would potentially entertain. Other than that, if price just ends up consolidating out here, maybe until Tuesday when we start getting more PMI data, then that's you know, I would pretty much stay out of the market until then. Narrow in your zones even more, where go on to the hourly time frame, and you've got this entire area right here where price is holding on to it as support, and then also a top wick rejection before a corrective move here, right? So if price continues breaking below this, then you got your scalps into day trades, and as soon as your 33,500 mark is broken, then you got those scalps turned into swing trades. For any buy opportunities, I'm going to wait for price to break above 33,800, and you can trade within the consolidation, but understand the limitations of your trade here, right? Something that I've been saying for a very, very long time at this point. But if price can continue breaking above this, give you a proper break and retest, then I think you got those potential buy opportunities to come back into this range right here. So you got that break and retest resistance, a massive push up, and then you see price reacting to this area multiple times too. So if you get a break and retest here, you got those clean buy opportunities coming back into this almost 34,000 mark. And that's pretty much it, I think, for this weekly outlook. Are there any questions?
No questions over here.
All right, perfect. So we will see you guys on let's take a look at Forex Factory again. So when do you want to do Tuesday for PMI?
Yeah, you want to do Tuesday? We could do Tuesday.
All right, so we'll see you guys on Tuesday for the PMI data that's going to come out. But other than that, if you guys ever have any questions, just feel free to reach out to either of us, on Instagram or here on YouTube.
Absolutely. Thanks for coming on, guys.
All right, have a good one.